The health of the real estate industry is dependent upon Fannie and Freddie. How did they do in first quarter earnings? That article and several different articles about the real estate market today. I know I told you yesterday it's been all positive and it continues to be. So we're going to hit that trend because we keep seeing those articles. Next on Real Estate Daily, welcome everyone. My name is Troy, and every day we go over the latest news in real estate, mortgage, and the housing market. Now, before we jump into it, if you are a seller, this is vitally important. I'm going to give you a free seller's guide. Go down below, hit the link, enter your email address, and we're going to send you a free seller's guide. It goes from A to Z, from picking the right agent to listing it to getting an offer accepted, what kind of offer, and then going through escrow and what are you going to net from that. It's all there in the guide. Fantastic information. It is free, so don't worry about it. So let's jump right into it. So a lot's been talked about over the last 6-8 months. The housing industry is unhealthy. It's falling 20%. I continue to hear people talk about it. But lately there's been a lot of positive because there's nowhere else to go. There's no negative news coming out. So check this out. This is crazy. Fannie Mae notches a $3.8 billion in quarter one profits, but single family acquisitions fell to the lowest level since 2000. Doesn't matter. They're not acquiring properties because there's not a whole lot of properties to acquire, but they're getting much bigger dollar amounts out of them. And this just gives the focus on why is the FHFA and other different organizations, real estate related housing organizations, why do they keep squeezing more and more out of the consumer? It's almost as if they're wanting to make sure that people don't get homes, and some of their buddies on Wall Street do. So when you go ahead from FHFA, you're raising all these fees, just like Fannie. How much fees Fannie's making and Freddie's making? They're making so much fees off this. Why can't we reduce the fees? This is just a government grab, a government money grab. The government keeps coming in and grabbing money out of Fannie and Freddie. They're not actually making the housing market better. Take those profits and then subsidize some of the builders to make affordable housing in areas that housing is not affordable. Instead, they keep using it for everything else, like the issues that are happening globally. We're not here to reinvest back in ourselves. We're here to invest in what? Other issues across the world? No, bad decision. Think about this when the next election comes up. Guys, I'm not a blue team, I'm not a red team, I'm not up or not down, but we can't put politics over policy. There is no way to do it, and we continue to see this happen when we see Fannie and Freddie make so much money, but we're just getting feed to death when we go out there for the buyers. All right. Next article here, DS News, low inventory hampering would-be buyer housing choices. I had this conversation yesterday with one of my clients. They're saying, well, Troy, I can't find anything out there that really suits me. And I told them straight up, guys, if you would have bought a year ago, when we first started, you would have had anywhere from $50,000 to $100,000 in a house, but you keep looking for your forever home. And guess what your forever home is? It's forever out of your budget, right? Can't do that. Go find a home that's practical. Get into it. Get equity in it, and then go from there. That's the way to do it. Somewhere down the road, when you have enough equity, you're in a good financial position, your jobs are stable, then go get that forever home and take your time. But until you have those assets, even if you found your forever home, that forever home is the same as 15 other people's forever home. And that's where we're in multiple offer situations out there. Stop looking for the forever home as your first home. Look at it as the steps to get to that forever home, but you got to take that first baby step. You can't go take a leap. Doesn't typically work out for most people. In an environment that we're in right now, doesn't work out for almost anybody. All right, next article. Are homeowners and buyers escrow accounts safe at local banks? We just saw big articles that came out today about 722 banks, regional banks and local banks are insolvent. The majority of escrows that are out there are not in Chase, Wells, Bank of America, Citi. They're not in those. They're in smaller banks. And so when you go and you open escrow accounts, they are accounts in which they're protected. Now, meaning that I can't go in and just grab money out of it and, go and solve it. They're protected. So here's Pacific Western Bank. They do a lot of escrows. They have an escrow accounts. I would be very, very cautious in doing this. Your escrow company is making the decision on what bank they're using, and those accounts have to be protected. They are in the respect that they can't have money grabs in them. You can't just go take money directly out of it because those are trust accounts. So I have a feeling that trust accounts are locked and loaded. They're solid. Even if they're above $250,000, they're in specific accounts that are only made for escrows and not made for bank fees or any other fees or anybody that can come in. You have to have signers, specific signers on these accounts that can only take the money out and that the checks are actually utilized for. So at this point, I think that they're in decent condition, but always have that conversation with the escrow company. Now, I know the buyer doesn't really pick the escrow company out very often. In fact, right now, I don't know anyone that has because it's all been a seller's market and the seller's been picking them out. But with that being said, those quick transactions, you got to think you're putting your money into an escrow account to close, as well as you're talking about financial institutions, your lender, your loan companies are putting the majority of money into those accounts. And they're literally being then at that one moment in time, then the title company confirms all the money, puts it in their sub escrow account, and then goes and records it and then sends it back into that account. So there's a lot going on, but it's only in a little time frame. So hopefully the escrow company and the owners of those escrow companies and those owners of those title companies, those boards, know that they're utilizing, companies that are solvent, that have good, banking practices. All right, so let's jump over to our interest rates. Looks like they're still kind of going up a little bit on conforming. Went up about 6 basis points on conventional, but we did see a drop here on FHA, or actually we kind of flat on FHA. Jumbo, like I told you, goes up one day dramatically, goes down another. I can't reiterate it over and over enough that you need to pick the right loan officer. It can't be a friend, can't be, I would go interview. If you're looking for your biggest financial decision, you have two people you need to interview to make sure that they're giving you the best possible the best possible experience, and they're looking out after your best interests over their best interests or over the dollar amounts they're going to get. The number one is a real estate agent, real estate professional, and number two, it's your loan officer. I always say that if I'm in touch with my clients all the time, at least the communication, that's a big step forward. And I want to know if I'm getting that information dissected back and forth to me about the escrow, if I'm getting an escrow, all the information about escrow. Am I knowing my loan officer is giving me the best rate? I can shop the rate. Is that loan officer communicating with me? Are they going over the process? Are they giving me the do's and don'ts while I'm in escrow? Do's, okay, meaning pay your bills on time. Don'ts, don't be opening up more credit. Don't be opening up, don't be buying cars. Don't be opening up anything else. So those are the do's or don'ts. If they don't give me that, then we know that there's an issue. And don't be afraid to go change lenders in at the beginning of escrow. If you're not getting your satisfaction from them, you can change that out. I will say this 100 times because I know a lot of loan officers won't even meet the clients at any point. They're just simply 9-to-5ers and they click. If you have a question at 6 o'clock and they don't call you till the next morning, guys, that's a big issue. And that's a red flag in my eyes. I only work with loan officers that keep the same hours that I do, which means that my clients that work all day want to have questions answered during the afternoon and nighttime. And if the loan officer says, well, I'm out, at happy hour and you're not important as me as that vodka water in front of me or that wine, well, then you are not important to them and you need to go and make better decisions on who you use. Well, guys, thank you very much for joining me today. I know it's short, sweet, but it is right to the point. I hope that the information I give you is good. If you have questions, please leave comments below. Otherwise, I will see you tomorrow.